Let's take a look at some information charts on Uniswap for Brave New Coin on this very red day for crypto prices. So Uniswap is one of the original AMM DEX protocols. And by now, every DEX on every chain pretty much has the same UI, which is perfect, excellent. Don't reinvent the wheel. You can swap from anything you want, anything else you want. You can connect to any wallet you want for the most part. And you can look at fees and you can look into aggregators and you can do all sorts of things. I don't personally trade on Uni or Sushi directly. I prefer aggregators like Matcha, Paraswap, 1inch, that sort of thing. But there certainly isn't anything wrong with just trading on this directly. I also prefer limit orders, which ideally would be coming to every DEX one day. And Uni's got pools, like I already said. They've got governance. We'll look at all that stuff. The big thing I think most recently is the lack of regulatory clarity surrounding what's going on with DeFi, specifically in the United States. Is it an SEC problem? Is it a CFTC problem? Is it fine the way it is? Do we need regulations at all? I think a lot of people are waiting for anything from anybody as far as what's going on. Uniswap kind of ahead of the game here, trying to get lobbying power behind them. They also have a lobbying fund full of lawyers or people in DC that are trying to be connected with lawmakers because they're fighting an uphill battle against legacy finance, most certainly. And they announced in October that they hired an Obama administration spokesman. That's typically what any company does. It's kind of the revolving door of DC. It's all part of the game for lobbying, but it's what they need to be doing with it. What they need to be doing, what they should be doing in order for you need to be on the right side of that conversation. Have somebody in the room discussing things. Here's a look at the pools. We can look at all the pools across all the DEXs. We can look at volume, TVL, what the yield is it yield at all, what impermanent loss is. You can go pretty deep and far in looking at all that stuff. At the end of the day, I don't think any of that will move the needle for the token price. We've seen crazy protocol revenue, crazy TVL for a lot of stuff. And in general, it hasn't really done anything for the underlying token price. So for me, it's a split between the protocol's great. It does this unique thing. Sure, it has competition, but it truly is a new paradigm versus the token itself, which I'm still continually having trouble figuring out what's important. It's easy to say, let's look at this, let's look at this, let's look at on-chain stuff. But does any of that really matter for token price? Thus far, from what I can tell, it really doesn't. If we look at something else for yield farming, it's important to know what you're getting into. There's a great thread here by Ming Zhao. And I'm not trying to talk anybody out of AMM or anything. As long as people are informed, that's all that really matters. But I'll give this thread a read through. She's basically arguing that it's not yield at all. It's not like traditional finance. There are much different risks involved. It's closer to an options trade. But anyway, she breaks it all down. Definitely would recommend giving that a read through. Now, if we look at TVL, the other problem with TVL is what do we value it in? Do we value it in USD? Do we value it in ETH? If we value TVL in USD, while the underlying is appreciating, it looks crazy bullish. On top of that, we also have stablecoin issuance at all-time highs. So that also definitely helps TVL. It's just important to know what you're looking at. That's, again, just the basic fact of it all. This is stats for version 3. Uni's not multi-chain, but it is multi-version on ETH. Volume has picked up ever so slightly here on average since launch. TVL definitely picking up since launch. Version 2 TVL, though, is also picking up since version 3 launch. Version 2 volume also picking up here slightly. And we can see all the breakdowns here. Do I think anything is specifically important for analysis unless you're deeply into this? I don't. Some of this stuff I don't really know what it is, like the Starlink, Saitama, Inu. I assume that's another Dogecoin clone. So not only do you have to know what the TVL is it ETH, is it USD, is it stablecoin, but you also need to consider how much of that is stuff like this, where it's like, oh, it's a fly-by-night Dogecoin clone, right? Is that important for your analysis and consideration? Maybe for some people, but maybe not for others. If we look at DeFi Llama across the board on all chains, Uni clocks in number 8 according to them at 10.4 billion TVL across Optimism, Arbitrum, and ETH. And we can see the breakdown there. It's mainly ETH. I mean, there's really no other game in town at the moment. And if we value this in ETH, it's actually gone down. That's maybe not entirely fair, but it's worth considering. It's the same thing with NFTs, do you value it in BTC? Do you value it in ETH? Do you value it in USD? Because of course in USD, it's going to look much more bullish if the underlying, the notional is bullish. And does this even matter for the token price? It doesn't seem to matter. It doesn't seem to matter that we're multi-version. It doesn't seem to matter that TVL is at an all-time high in USD. Trading volume is up slightly. And obviously, if it's an exchange, you want volumes to continue to increase. Transactions essentially flat over the year. Not too much change there. Users up slightly over the past few months. What's really hurting DeFi is ETH fees. As long as ETH fees remain high, DeFi is really going to take a back seat to that because it's pricing lots of people out of actually using the chain. Here's V2. They have TVL at 12 billion. Volume down and flat. Transactions down and flat. Users sort of up. Over the past few weeks, that's why this is hard to read. This doesn't look amazing to me. And maybe that's why the token price is going nowhere. It's just sort of down and flat. Users, oracles, everything. This is only V2, and it'd be best if we could see V3, V2, V1 all stacked on top of each other. But none of these look crazy bullish aside from TVL. And then on optimism, TVL is just kind of flat so far. If you look at DEXs across the board, though, comparing everything to everything, Uniswap's volume is almost always greater than 50% per day compared to all the volume in the ecosystem. So they are definitely the winner when it comes to market share on that front. Daily DEX volume here, you can see in the pink, it's no contest. Uniswap is almost always double, sometimes triple all the other volume in the space. Monthly volumes, their best month was May along with everybody else. They actually had a really good October as well, which may be somewhat surprising considering volatility was quite low on the majors for the most part. But really what you didn't want to see is a rise in May and then a complete drop off after that. We definitely have sustained volumes in the $60 to $80 billion range per month. It's only the 16th of November and we're already nearly at 60 billion again. So this stuff isn't going anywhere anytime soon, certainly. Switching gears to on-chain activity for the token itself, here's where we get more and more bearish on the metrics. Now, is that going to affect the price? Is that going to change my decision-making process on the price? Probably not. I focus on technicals personally for that stuff. But when you see transaction counts drop continuously month over month, the first question is why? Do you need to move this thing or do you need to move any DeFi token? The answer for me is no. I don't usually move stuff around. A lot of this is probably protocol revenue related, AMM related. You have to make sure something like Coinmetrics is measuring that stuff, but I'm sure they are because it's on chain. If it's on chain, Coinmetrics will see that. Average transaction values just kind of flat and falling a little bit over the past few months. But in general, just not a lot of activity there. And that's going to affect everything else down the line, like NVT, which measures on-chain activity relative to market cap. If there's less and less on-chain activity, NVT is going to keep rising, which is bearish in a vacuum. And unsurprisingly, active addresses just continue to decline along with transactions per day. This is probably an all-time low for active addresses down here, 1810. That's getting close. There's just not any on-chain activity relative to what used to be going on for most of DeFi, but specifically Uni here. And price versus MVRV is another measure of on-chain activity versus market cap. For most coins, this tops out at a 2x multiple, meaning market cap can get 2 times greater than on-chain activity before we start to see pullbacks broadly. It just indicates usually things are overbought. There's too much speculation in the system. For DeFi, that really hasn't mattered at all. In February, we were at 4 plus and price went from 18 to 41. Currently, MVRV is at 1.4. So I think eventually MVRV is going to have a signal for DeFi. It just probably needs a year to get a grasp on what's going on chain. Part of the reason why MVRV looks the way it looks is because most of DeFi, you just don't move on chain, right? I can't stress that enough. For most of this stuff, most of these coins, you're not using them as a currency. You're not using them even really as a reward system. They just kind of do their thing in like a staking style component. For the PE ratio equivalent, the market cap over annualized revenue ratio, this is something else that I wish made sense for price. I wish fundamentals like this had an impact because that would mean Sushi, Comp, Aave, Uni were all much better buys and more bullish than the right side of this, or at least these are the better value buys because the market cap over revenue for Sushi is less than 4x, for Uni less than 6x, and for SNX it's 134x, meaning the market cap of SNX is 134 times greater than annualized revenue. But in general, all of these sort of act the same price-wise. If the sector is bullish, everything is bullish. If the sector is bearish, like today, everything's bearish. Even if we look at supply side revenue for Uni annualized, it's at 2 billion annualized. And that doesn't really seem to matter. You know, as much as I want that to matter, it really doesn't seem to matter. And we can go all the way down the line here, and we can look at things that are correlating with Uni, are more or less bullish than Uni. And my guess is you're not really going to find much as far as what's really relevant here. So it's interesting to look at this, but it just doesn't seem to affect price at all, or at least hasn't yet. If you look at Uniswap worldwide Google trends over the past few years, there was a peak, an all-time high in this in earlier this year in May, which makes sense. May is kind of where everything came to a head. There was a lot of volatility. People got super excited and then nearly euphoric before everything crashed. Most recently in October, we're picking that steam up again. DeFi's getting back in the conversation. DeFi was doing quite well across the board, but price-wise, Uni didn't do anything during all of this. It was basically flatline, low volatility. So on the whole fundamental side of things, it's really hard to know what's worth paying attention to. On-chain metrics are bearish, revenue super bullish, TVL super bullish. Here's the price chart. Here's technicals. I'm going to start with Bollinger Bands, which you obviously want to look at before they break down or break up. But this just gives you an idea of the lack of volatility. The highlights here are the tightness or the caliber of the bands themselves. And this just says we were the tightest we'd ever been for the longest period we'd ever been in October to present, and we didn't break up to the bullish side. It's also worth noting that this indicator really didn't help you because, yes, it told you a move was coming soon, and ideally this should indicate directionality, but historically it hasn't performed super well. You can see when we're above the midline here and we're tightening on bands, it says we should get a bullish move to the upside. It's not like rocket science, groundbreaking stuff. That happened here, that happened here. Didn't happen so much here, definitely didn't happen here. And we went from bullish to a week or 2 weeks to bearish to bullish to bearish to bullish to bearish. And there's no signal there. You can say in hindsight, yeah, we broke down, we were below the midline, but wasn't super helpful at giving you a clear signal for an extended duration. But we are below the midline, or we are below the B bands now, which definitely shows a bearish breakout. If you look on the 5200 EMA's VPVR volume RSI, and I have some pivots on here, we couldn't quite break above that 50% pivot, couldn't break above the VPVR level at resistance, and we're now below the 200-day moving average, threatening retest of like 2018 level, and you don't want to get down there. And so far, really since June on Binance, there's really been no volume per se. So we really need volume to pick up to find a bottom. We really need some capitulation, excitement, blood in the streets, any emotion whatsoever at price falling like this. Otherwise, it's just going to be a slow, continuous bleed until there is some sort of capitulation going on. The next support down based on volume is between 17 and 20 down there. And this would also be threatening a bearish 5200 cross over the next week if we do hold at this low. Today we are threatening a bearish Kumo breakout for the first time since we broke above in October. So you can see here, just like B-Bands was projecting a move to the upside. It just didn't happen. We just kind of hung up here for quite some time, and there was just no volume, no excitement, nothing to get us moving. And now we are starting to break down, and nobody seems to be excited about buying it. Uni against BTC has been bearish really since August. It started to break down below the cloud in June, below the 200 in July, and then eventually below the 200 in August, while it was below the cloud the whole time. So trend was leaning heavily bearish ever since August, and ever since then, it's just, this is what exactly I'm afraid of on the USD pair. You do not want, if you're bullish, you do not want multi-week, low volume, just complete slide lower, lower, lower with nobody really caring what's going on. Volume support on VPVR is at 30K, sats, 27K sats, 22K sats. So there's some support on the way down. But another issue with this DeFi stuff is the bullishness in January didn't really give you any supports on the way down, volume-wise, straight up, straight down. So if it breaks ranges just across the board on DeFi side of things, the next range down is much, much lower, specifically on the BTC and the ETH pairs. I mean, this on the ETH pair looks definitely ready for a push towards all-time lows. There's not even a bull div here just yet, with RSI still making lower lows, with price making lower lows. No volume support whatsoever. Below the 200, below the cloud. Is it oversold? Sure, but there's nothing here that tells me this can't go lower. So love the protocol. On-chain stats are a bit bearish. TVL definitely was at all-time highs before today and is still very near all-time highs. And any other metric you look at is basically bullish, but technicals, which for me lead over fundamentals, are definitely leaning in the bearish camp. Lastly, let me just mention the ETHBTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults I'm in here on Yearn, Comp, and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.